Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, January 27th, right after the markets close. Well, Wall Street moved higher today after data showing easing inflation spurred hopes of a policy downshift from the Federal Reserve, while the credit card giant American Express jumped nearly 10% on an upbeat forecast. Remember that we are still in the thick of earnings season right now, and in the coming week, momentum stocks like Apple, Amazon, and Microsoft will announce earnings and they can move the market. Plus, we're going to get the FOMC rate decision. That will come out on Wednesday, February 1st. So, with that in mind, let's look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, the SPY closed today at $405.68. Right now, it's 15% below the SPY's all-time closing high on January 3rd of 2022. That was at $477.55. So 15% below is a good thing. It has climbed out of bear market territory, at least for now. And it is also, the really good news is it's also 16% above the October lows, October of 22, of course, when the market gapped down to the low of 348. So we're actually at the moment looking a lot better than we have earlier or in the final quarter of last year. So we know from these October lows here in 2022, the SPY climbed out, it jumped up off that low right there, and it moved up back over the 20-day moving average, the 50-day moving average, the green line came in, crossed over, the 20 climbed above the 50, which is always a positive note, and the market moved up here in November and December and moved up to hit a high here of about 410 both times. So interestingly enough, if you draw a resistance line or a level line across the top of these two pivots and then go left with it, you'll find that back in September or late August it might have been, it hit the same pivot and then fell back down. It was actually a throwback rally from a head and shoulders that was hit right here. We had a head and shoulders. Of course, that was broken, and that's a top reversal pattern. Price came down, went up. A throwback rally is when it tries to go up and move back into the prior price area but can't do it, and then rolls back, meets resistance, and then, of course, as we know in September, we did a dumpster dive here. But at any rate now, guess what? The market tried twice, November, December, to go over that 410 number, couldn't do it. Back down to like almost 370 here, then consolidated along underneath the 50-day moving average, and now, of course, is trying to move back up, has moved over the 20-day, over the 50-day, and is making a mighty stretch here to move back up, and again today closed at $405.68. We know the high of today came close to hitting that 410 mark again, so if you look left, it's really interesting. You can see how support and resistance forms, and resistance means the buyers put their hands in their pockets and say, nope, not buying anymore here, and a lot of people who can't read charts, which is most of the world, of course, they may say, well, they can't read a chart, but they sure know where they bought the last time and got creamed, or they know that if they bought a little earlier and the market moved up to 410 and then rolled over, they do know that. So that's when buyers put their hands in their pockets and even start selling right at these pivots points here, and that's what drives them back down. Very, very simple. More sellers than buyers will do it every time. So now we're back up to this point again, and what's going to happen? We've got challenges ahead, again, with earnings and the rate decisions. But we have started the market positively on the year. That's always a good thing. Again, we have to get through earnings in the FOMC meeting next week. What we need here is for the SPY to climb over 410 and stay over it. Of course, we've got support down here with these moving averages. They're all coming in together in this range here from 392 to 394. We'll call it 395. You've got the 20-day, the 50-day, and the 200-day. Plus, look left, you'll see price support in the same exact zone. So this area here should provide, one would hope, but it's a fingers crossed things. It doesn't mean it will. But if price can go up and over this 410, if it has to move back down, fingers crossed it would hold here at about anywhere from 390 to 394. Of course, if it doesn't, then of course we could see another leg down. Hopefully we don't see that. So please be watchful, trade safely, and keep your protective stops in place. Our second chart today is a daily chart of the QQQ. Of course, the QQQ represents the NASDAQ 100, a major index in the market, one everybody has been watching like crazy, of course, for the last year, with top holdings including momentum stocks like Apple, Amazon, Microsoft, Alphabet, Tesla, that whole group. Now, the QQQ made its all-time closing high on November 19th, and that was 2021 at $403.99. And of course, it's handed out a little bit of misery since then. The Q's closed today at $296.26. That's still 26% below that all-time closing high. Anything below 20% is still in a bear market, and that's what we have. Now, we know that it gapped down in October of last year, just a few months ago, though. It gapped down to 255 and then rallied from there. Rallied up from there, then bumped into the 50-day moving average coming down overhead, then made a higher low at 260 here on November 3rd, then rallied up again and walked along the 50-day moving average until mid-December when it came back down to 260 again. Now, I've told you in previous sessions that this $260 line here, 260, does have prior support from years ago. So this is a pretty tough support line. We do have a pretty tough support line here at 260. So again, came down to that line. Then the first weeks in January, the tech stocks started up. Everybody said, heck, they've been down long enough. This has got to be it. Hoping that that we don't go into a bad recession, which is always bad for tech stocks. So now it's climbed nicely in January above the 20-day, above the 50-day, and today, hooray, it climbed up and above the 200-day moving average, so you can really see it, again to close at $296.26. Now we see if the QQQ can stay above the 200-day moving average and climb above, now we look left, just like the SPY. We have price resistance. My line isn't too straight, but you see it. We have price resistance from before, and it even goes back further into 2022. So this 296 level here, 297, that's going to be a tough line to get over. We're going to have to see in the coming week if the QQQ can rise above that. If it can, it will be great. If they make a big interest, if they do a 50-point basis hike, we may see techs kind of fumble around a little bit on that one because techs don't like high interest rates. So as we move through the final week of earnings season and that Fed announcement, please know that it might be pretty exciting. So please consider using protective stops on all your trades. Our third chart today is the Global X Fintech ETF, a daily chart, of course. I went through a lot of ETFs today looking for entries. A lot of them are overbought in the short term. I'm not totally interested in getting into a very overbought position here. So I went through a lot of them, and a lot had moved up, in a perpendicular way here, and I wasn't really didn't want to get in there. Wanted to wait on those a little bit. So I looked at the Global X Fintech ETF, which of course is a global industry group. It has 71 holdings. Top components include Block, Fiserv, PayPal, Fidelity National, and Intuit. Now, you can't see it on this chart, but the FinX, well, it's FinTech, made an all-time high in November of 2021 at $53.66, and then fell with the rest of the market in 2022 to its very recent low here. Its all-time low here was in December at $18.35. So from $53.66 to $18.35. If you look at a longer-term chart of the FinX, you will see support in this earlier support in this $18 to $20 range back in 2020 and 2019. I always, before I go into any asset, look at longer-term charts to see where prior support is or has happened before. And in this case, we have it here at around the $18 to $20 range. So I like that about this. So back to present day, the FinX did move up in January. From these lows in December, it moved up over the 20-day, the red line, over the 50-day. And it's done a steady little stream here of moves up pretty well up to the 200-day moving average, and it closed today just under the 200-day at $22.31, and the 200-day moving average is coming in at $22.58. So it's going to hit its head on this line here, I suspect, in the coming week. Now, okay, so if in the coming week, and I want the FinX to move above, definitely move above the 200-day moving average. If in the coming week, if the market behaves relatively well and doesn't do anything ugly, if the market behaves and the FinX can stay above the 50-day moving average, I'm using the 50-day down here, and that's now coming in at $20.07. If it can move above stay above the 50-day moving average coming in at $20.07, I will add a small position to my trading portfolio with my initial stop is going to be down here at 1980. It may not be able to get over the 200-day this week, I'm not sure, and it's getting a little overbought in the short term. So stays above the 50-day now at 2087. I will add a small position to my trading portfolio with my initial stop at $19.80, just below the 50-day. If and when it rises above the 200-day moving average, which is now coming in at $22.58, I will add to my position. I would like it to stay above it for 3 days. Some of you aren't going to want to wait that long, but that's what I prefer. I will add to my position and trail my stop by then for sure. So you may want to keep an eye on the FinX or the FinTech ETF in the coming week. Now, please know that if you'd like to become a more successful trader, this is the perfect time at the beginning of the year to check out my trader training programs. You can choose from 10 different online trainings, like our flagship trading program, 7 Steps to Successful Trading. Plus, you'll find easy to learn strategies that target swing trading, trend trading, bottom fishing, and more. We also have the one for novices, how to read charts, and everybody likes 3 winning setups for short-term trades. So think about starting the new year by learning how to increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen right up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.